everyone. Jesse Webb, TradersPro. Market conditions mildly bearish in a bull market, essentially, which means we're pulling back, we're retracing in an overall uptrend. This is, not unexpected. We've been talking about this for several weeks that we're at the upper end of this range. Shouldn't be overly concerning at this point. This is the location, though, where we start to look for any type of trend momentum shifting, and that could potentially become concerning, but these are some of the early indications of a reversal. The overall momentum, we've shifted back into that hold range, which essentially means we're no longer trending significantly to that upside. We're just pulling back into that pause range. So we want to keep an eye on what's going to happen over here over the next few days. We could certainly get a bounce. Once we get back to support, we'll look at that S&P 500 chart here in just a minute. Breadth indicator also pulling back, which is also not unexpected. Sentiment still in that upper range, which is where we want that to be currently. Buy-sell ratio has ticked back to negative. We've got 0.92. Bears starting to take control here of the momentums. You can see that middle line there. We're starting to see that shift. We've talked about this the last few weeks, where we've been in this overall uptrend, watching for either some strength, some acceleration, one way or the other. Now at this point, we've just had a really strange, tight, narrow move in price activity for the last 3 or 4 months. This is typically what the market looks like. This is not typical of what the market looks like. So whatever that means, not entirely sure at this point, other than the fact that the number of buys and sells is just not quite as amplified as it typically is. So that could mean there's just a lot of uncertainty here at these levels. Sentiment has pulled back off of the upper ranges and it's now approaching that halfway point, 54. Sometimes we should see, you can also do the same thing here, is draw a line across the middle here and see where we start to get, in a downtrend, we should get resistance here. In an uptrend, we should start to get some support right around that 50% range. So keep an eye on that over the next few days as well. Individual stocks, when the market conditions start to waffle a little bit and we get back into bear market territory, remember what what the direction alerts is indicating here, and that is this means that traders and investors should be trading with a neutral or bearish bias by raising stop levels on winners and selling losers. It just means tightening up your risk parameter, looking to clean house in the portfolio, so to speak, maybe lighten up on some positions, tightening up the stop losses, and watching for any acceleration to the downside. If we see that today, looks like we've got a jobs report that was lower than anticipated, but the market may want that because they want to see that the Fed is actually doing its job and slowing the economy and preventing continued inflation. We'll see if that ends up working. We'll see what the market conditions look like today. Any new buys here? We've got a couple to look through, and let me just refresh my page here for you. We've got MLTX in that upper range. Although, again, not a real positive confirmation bar. It's got that topping tail bar. We also want to look for the zone. When we're in an uptrend here, this actually has the short-term trend down and kind of an ugly bar with that topping tail bar. So we don't necessarily want to just jump into anything. We also want to analyze what's happening here in the market, what's happening in the individual price pattern. Even though it's in that buy zone short-term trend, I would just pass on that one. IRON medical stock has been a nice uptrend. Really had some consolidation, hasn't moved. It moved from buy back to hold, back to buy. It's just fairly tight range. Maybe one certainly to keep an eye on here as well. Pretty smooth pattern. Cook gap higher based on something, news or probably an earnings report. It's in that upper range. Massive momentum, but we want to give it some time to settle back in a little bit. DMRC 22%, big gap breakout. Moved up to the extreme range, 22%. That's a really nice pattern, just a little bit too much confirmation in that breakout pattern, but we've seen those continue to accelerate in this market right here, so I'd keep an eye on DMRC as well. MOMO, potential breakout candidate here for a pullback or retracement, this upper range, see if we can get some upside to that one, and that could also have some momentum on that as well. RELY, breakout trade, this upper range, 20%. Having a lot of those in this update today. So they're not fantastic patterns, especially when you're immediately on the upper side of momentum. You want to allow that to pull back in, and look for better opportunities. And in some cases, sitting on your hands does not hurt. That'll do it for today's update, and everyone have a fantastic day today.